You are at a Zomato checkout screen. You have added the meal. You see the extra side dish for 89 rupees. You stare at it for a few seconds, doing the math quietly in your head. The month still has 11 days left. You remove it from the cart. Now picture someone else, same city, same age, same hours in the workday. She just booked a last-minute flight to Goa on a Tuesday morning because the Indigo fare dropped to 2,200 rupees, and she felt like going. She bought the ticket, didn't think about it again until she packed, and didn't do any math at all. These two people are not living different versions of the same life. They are living completely different lives. And the gap between them is not luck, and it's not some massive salary difference. It's a specific, measurable threshold. Today, we are going to find it. Welcome to Shivani Talks Money. Before we follow someone through every salary level, let us establish where everyone actually stands. Because most people dramatically misread their position on India's income ladder, and that misreading costs them. The median salary in India is 27,300 rupees per month. That is not a household income. That is one person. Half of India's working population earns less than this. The median annual salary in India in 2026 is estimated at around 5 to 6 lakh rupees per year. So when someone says they are doing fine on 8 lakh rupees per year, they are describing an income that is genuinely above average for India. Not rich, not struggling, just above the middle. And here is the fact almost nobody in Indian financial media bothers to say clearly. A single person's essentials, food, utilities, transport, and leisure, cost approximately 27,300 rupees per month in 2026, excluding rent. Meaning the median Indian salary covers survival costs before rent is even considered. Let that land. Now let us follow someone through each level. Meet Priya. She is 26. She works in back-office operations for a mid-sized company in Pune. She earns 25,000 rupees per month. Under the new tax regime in 2026, there is no income tax liability for annual income up to 12.75 lakh rupees. So at 3 lakh rupees per year, Priya pays zero income tax. After EPF deduction of around 1,800 rupees, her take-home is approximately 23,200 rupees per month. That is the whole board. Now watch what happens to it. A 1 BHK apartment in a mid-sized city like Pune costs around 11,000 rupees to 15,000 rupees per month. Priya shares a flat with a colleague to keep costs down. Her share of rent? 7,500 rupees. Groceries on a strict budget, 3,500 rupees. Transport by two-wheeler, petrol and maintenance, 2,000 rupees. Phone and internet, 700 rupees. Electricity and utilities, 1,200 rupees. Health insurance through employer. So no direct deduction there. Total, 14,900 rupees. Remaining, 8,300 rupees. Sounds okay on paper. Except 8,300 rupees has to cover everything else. Every medical bill, every family emergency call from home asking for money, every unexpected anything, every month that the bike needs a repair. And Priya is not saving anything structured. This is what 25,000 rupees actually feels like. It feels like doing the math on whether you can afford to attend your cousin's wedding in another city, because the bus ticket plus 2 days off work and one nice outfit is already 4,000 rupees. You don't have cleanly available. It feels like declining every group dinner suggestion, not because you are antisocial, but because 600 rupees per person is genuinely not a small number, when your entire surplus is 8,300 rupees. It feels like checking your bank balance before buying medicine and feeling embarrassed about the fact that you checked. Here is what the system does to Priya at this income level. Instant loan apps charge 35 to 50% annualized interest rates to people who cannot wait 2 weeks for a cash crunch to pass. Credit card minimum payments trap people who use cards for survival expenses into debt cycles that compound faster than any salary increase can catch. The less margin you have, the more expensive every financial mistake becomes. Priya is not bad with money. The math simply refuses to cooperate. 5 years pass. Priya switches companies twice, builds skills, and now earns 50,000 rupees per month, 6 lakh rupees per year. Under the new tax regime in 2026, annual income up to 12.75 lakh rupees has zero tax liability, so Priya still pays no income tax. After EPF, her take-home is approximately 47,500 rupees per month. The budget can now technically balance and breathe. She moves into a decent 1 BHK on her own, rent 14,000 rupees. Groceries upgraded from survival level to comfortable, 5,000 rupees. Transport? A slightly better bike and occasional Ola, 3,000 rupees. Phone, internet, OTT subscriptions, 1,200 rupees. Utilities, 1,500 rupees. Health insurance, 1,000 rupees per month for a 5 lakh rupees personal policy. Total fixed costs, 25,700 rupees. Remaining, 21,800 rupees. Priya can now start a SIP of 5,000 rupees per month. She can build an emergency fund. She can say yes to the group dinner occasionally. She can fly home for Diwali without a financial crisis. But here is what fragility actually feels like at 50,000 rupees. It feels like finally being able to breathe, and then the doctor says she needs a root canal, and the dentist quotes 18,000 rupees. The breathing stops. It feels like telling yourself you are doing okay because the bank account is positive while quietly knowing that one job gap of 2 months resets the entire clock. It feels like you have upgraded from drowning to treading water, and everyone around you is congratulating you on how well you are swimming. The trap at this level is lifestyle creep. Priya now wants a better bike, a slightly nicer flat, more eating out. Each upgrade feels earned and reasonable, and each one silently reduces the margin that was just starting to matter. Priya grinds further. She is now 32 and earning 1 lakh rupees per month, 12 lakh rupees per year. This is the milestone everyone in India treats like a finish line. After the new tax regime deductions and EPF, her actual take-home is approximately 87,500 rupees per month. The budget now has real room. A good 2 BHK in a decent Bengaluru locality, 22,000 rupees. Good groceries, 7,000 rupees. Car EMI on an entry-level hatchback, 12,000 rupees. Insurance, fuel and maintenance, 6,000 rupees. Phone, internet, subscriptions, 2,000 rupees. Utilities, 3,000 rupees. Health insurance with better coverage, 2,000 rupees. An actual social life. Dining out, 1 weekend trip per quarter, 8,000 rupees. Total, 62,000 rupees. Remaining, 25,500 rupees. Priya can now invest 15,000 rupees per month in SIPs, build an emergency fund in under 6 months, and start seriously thinking about wealth. Here is what 1 lakh rupees per month actually unlocks, and it is more specific than people realize. It is the first time Priya wakes up in the morning and does not immediately think about money. That is not a small thing. That is the entire product. The absence of financial dread is itself a form of wealth. Most Indians never experience it. But, and this is where things get complicated, Priya is not rich. Not even close. If Priya lives in Mumbai, that 22,000 rupees rent is probably 35,000 rupees. The budget tightens again significantly, and we are back to treading water in a better postcode. Priya lands a senior position. She is now earning 2 lakh rupees per month, 24 lakh rupees per year. After tax under the new regime and EPF, her take-home is approximately 1,55,000 rupees per month. Now watch what the math does. A proper 2 BHK in a good locality, 28,000 rupees. A decent car, EMI, 18,000 rupees. Insurance, fuel, maintenance, 8,000 rupees. Premium groceries, 9,000 rupees. Utilities, 4,000 rupees. Health insurance, 3,500 rupees. Real discretionary spending. Actual holidays, dining, some luxury, 20,000 rupees. Total, 90,500 rupees. Remaining, 64,500 rupees per month. Priya can now max her EPF, invest 40,000 rupees per month in equity mutual funds, build a proper emergency corpus, and still have money left. The decision-making framework shifts from can I afford this to do I actually want this. That is not a subtle difference. That is the whole game. But here is the data that should genuinely disturb you. A study of high-income households in India consistently finds that lifestyle inflation expands to consume every rupee, regardless of how many rupees that is. People earning 2 lakh rupees per month with a car loan, a home loan, private school fees, foreign holidays, and premium memberships can find themselves just as cash tight as someone earning 50,000 rupees. The trap gets bigger, more comfortable, and significantly harder to see from the inside. Here is what everything we have covered today adds up to. The real financial threshold in India, based on actual savings capacity, not what feels comfortable, is somewhere between 75,000 rupees and 100,000 rupees per month in take-home income, depending on which city you live in. Below that, the fixed costs of being a functioning adult in a metro consume nearly everything, and one piece of bad luck resets the clock. Above that, you start building actual margin. The margin compounds. The compounding produces something that actually resembles wealth, but that margin is a doorway, not a destination. Walking through it does not automatically make you financially secure. What makes you financially secure is keeping your fixed costs well below your income and holding that line while the difference compounds quietly in boring index funds for 20 years. The paycheck is not the variable. The gap between the paycheck and the lifestyle is. And the gap is always a choice, except at the levels where the math simply refuses to cooperate no matter how disciplined you are. Open your bank account right now, not tomorrow, right now. Add up your fixed costs, rent, EMIs, insurance, subscriptions, everything that leaves whether you like it or not. Look at your take-home. The gap between those two numbers is the only financial number that actually matters. If it made you uncomfortable, good. Uncomfortable is the beginning of change. If this video helped you understand your money more clearly, give it a like, share it with someone who needs to hear this, and subscribe to Shivani Talks Money for more honest, research-backed money conversations every week. And watch our last video on minimalist money rules, the 6 habits that keep people financially stable in India regardless of income. Link is right here. See you there.